I don't really want to get involved in the politics of the United States because it's far too hot a subject anyway. So I look at it from a macro lens. What does this all mean, right? So what it all means right now is, so Biden comes in next week or whenever it is. He fought on the COVID virus, and therefore he's likely to have to do something about it because that's kind of what he promised. So again, whether we like it or not, our job is not to impose our wants. You as American voters can do that. But from an observer, I'm trying to look at probabilities. What is the probability that the US goes into stricter lockdowns as Europe is doing all over? Extremely high. Again, whether we like it or not, those are the facts we're likely to be dealt with. So if we think of peak virus in the US and the fact that the political consensus from the Democrats is going to be about more restrictive measures. And again, we've seen that all over the world, whether it's South Korea, whether it's Japan, we're seeing it in China again, and we're seeing it all across Europe. So the market right now is having a huge bet. It's maximum short the dollar, it's maximum short bonds, it's maximum long equities. So they're expecting utopia. Straight to reflation. Don't worry about the biggest recession any of us have ever faced in our lifetimes. There's no overhang, everything's straight to normal. Having done this for about 30 odd years, I know that almost all recessions get this phase in the middle, and I call it the hope phase, where people extrapolate a future that is probably unrealistic at that point in time. So I worry that everyone's going to have these bets wrong. And again, there's no certainties in this world. We deal in a probabilistic world, and I worry that we probably got some more downside again from the stock market. We've probably got the fear and a real economic slowdown that's not priced in. There's more pain to come on Main Street. There's more pain to come from small businesses. There's more pain to come in unemployment. That's not going away yet. My guess is it starts to improve in the second half of the year and really picks up after that. So I'm pretty anti-consensus here. Consensus is everything's fine. My view is it looks fine on Wall Street, but when you speak to any friend of ours who owns a restaurant or a bar or any service industry, I mean, they're decimated, and it looks like more restrictive measures are coming, so it's only going to be worse for a while.
Well, anyway,
I can't argue with that. I don't see the silver lining anytime soon.
No, but the outcome is, okay, so given that set of facts, what are the government going to do? Well, we're already hearing about a larger stimulus than the one that we've just had. So there's a larger stimulus in the making. If the market falls, if economic weakness continues in the way that I think, the probability of a larger fiscal stimulus goes up. And the probability of the central bank being involved goes up. So one of the big themes that I'm sure you guys have been following, as I've been following, is the kind of devaluation of fiat currency, the excessive printing, and what that does to hard assets. And that, I think that theme is, gold's been trading sideways for a period of time now. But my guess is all of this kicks back into gear again once people realize that, okay, we're actually not through this. There's more stimulus. Europe needs to stimulate again. Maybe Japan needs to stimulate, and a bunch of other countries as well. And that plays into the hands of many of these hard asset trades that we've all looked at.
So can I ask you an off-the-wall question, if you don't think, what I'm watching, is you have Yellen, who is Secretary of Treasury, and you have Powell, who's the Fed. Do you see anything in that? Because what I see is the marriage of the Treasury and the Fed. I thought they were separate.
That's coming without question. So the central bank digital currencies is a big movement. The IMF have told us about this. So the ECB, the Bank of England, the PBOC in China, everybody's talked about it. And they're essentially talking about the fact that monetary policy has run its course. So the only way monetary policy can work is if it's tied to fiscal policy, which is the MMT style discussion. That's coming. Again, whether we like it or not, it's coming. So I think purposefully to have Yellen in means that those two offices basically become more linked, because if not, the central banks can't do anymore. There's just keep printing money for what? To make the 1% richer and doesn't help anybody else? That doesn't work. What you need is stimulus that helps those restaurants that our friends have, or the dry cleaning business, or whatever it is. And there's no way of doing it by because the banks won't lend.
So let me say this then. Isn't it helicopter money? I mean, they can't, like, if you don't have a good balance sheet, you can't borrow any money. But they need to get the money into the hands of Joe, Mr. and Mrs. Public. So by Yellen and Powell marrying up, they can bypass the banks and just inject cash straight to mom and pop. I mean, is that how you see it? That's how I see it.
Exactly right. And that's what central bank digital currencies do at core. They create a banking function from the central bank that they could say, hey, Robert, I'm going to stimulate you this much, and I'm going to charge you a different interest rate. So you could have a negative interest rate because you're a saver, and a student could have a positive interest rate. All of this, the behavioral economics of monetary policy and the combination of monetary and fiscal, is all coming over the next few years. So we're going to see a massive change. And in the end, yes, it is helicopter money. There's no way around that.
So how does the central bank digital currency, what does that look like? How does that play out? And how does that affect like Bitcoin and gold and silver?
Well, it's basically twofold. One is this need to extend monetary policy in a way that might work, because they're kind of acknowledging it doesn't work. The other thing is they're acknowledging we live in a digital world. Everything we do, we're talking over Zoom now, and it's like sitting in the same room, right? The world has changed. We're totally digital. So you need a payments platform that can instantaneously move money around. Also, they've decided that they want to be able to instantaneously create stimulus or withdraw stimulus to different parts of the population. So central bank digital currencies allow all of that. But what it also allows is on-ramps and off-ramps for the digital world of Bitcoin and the other cryptocurrencies, because it becomes seamless, very quick. I can transfer money out of dollars straight into Bitcoin, straight across to yen, and all of that world flows. So it does give us this life raft, which is Bitcoin, that we can use as our own reserve currency, much like many of us have used gold for many years. And, gold has always formed part of the system. That's not going away. But Bitcoin is the kind of new elephant in the room that's really adapted to our modern environment. And it makes it super, super easy to use.